What's up, guys? I wanted to go over a quick trading strategy that I've been adapting lately and been using a lot more. Just using two simple things. We're using the 50 EMA and the 200 EMA. Um, Sorry about the stuff. Nose a little bit sick. The gray EMA that you're going to see here will be the 50, and the green will be the 200 EMA. So what we're looking for is looking for crosses in these EMAs, indicating downtrends and indicating uptrends. Now, these work best on the 5-minute chart, which is perfect for day trading. Whenever we have a 5 EMA crossing below the 200 EMA is allowing us to know that we can go short on this. And usually my rule of thumb is I will go short until I see a KST cross or some sort of reversal on the indexes. So right here, you're entering on this 50 EMA crossing below the 200 EMA at 8:05, and you're exiting at this KST cross right here at 112.7. Same thing here. There's two different ways you could play this. On this one, I wouldn't have played this just because of the KST, but same thing. When you have gray crossing above green or 50 crossing above the 200 EMA, you're pretty much playing this until you get a break of that EMA. Maybe if you were a little bit cautious, you could have exited right there, but you're still making some profit from 117.17 to 117.87. Even more if you waited a little bit longer and you're getting 118.79. Let's find another example. Here we go. We got the 50 EMA crossing below the 200 EMA at 119.7, and you're getting out once that is reclaimed at 114.55. Let's find one more example here on AMD. Here we go. You're getting in on this long position on this 50 EMA crossing over the 200 EMA, letting us know that the short term is strong relative compared to the long term. And you're exiting whenever we get EMA, whenever you see a candlestick dip below the EMA. So you're entering around 112.25. You're exiting around 119.9. Now, of course, there's different factors you have to think about whenever you're trading this strategy. You can't just rely on the strategy by itself because, of course, not every strategy is 100%. We'll go through a couple more and we'll find a couple failures and see how we can figure out how to know if it's a failure or not based off a couple other indicators to support resistance. So next one here, this is on SPY. 50 EMA crossing above that 200 EMA. You're entering at 424.45 and you're exiting once you get that break at 435. Let's see what we got here. All right, we got another short opportunity right here. You're entering at 9:45 on this large candle and you're exiting. So you're entering at around 432.64, exiting at around 431.1. And then, of course, you'll switch to the long right here. All you're doing is playing the trends here. Think about making another video on this indicator that I just started picking up down here, the VMC Cipher B divergence. I think it's only on TradingView. It's like a $1,500 indicator, but it is free on TradingView. So I've started learning a little bit more about it. It pretty much just studies market flow. Red means the order flow is bearish. Green, of course, is bullish. Anyways, we're going to incorporate that a little bit into this strategy along with the KST, but 50 EMA crossing above that 200 EMA, getting out right there. And of course, to end the day, well, what do we have here? We have a curling KST, and we have a 50 EMA that looks like it wants to dip below that 200 EMA, letting us know that this is probably going to be a short opportunity for tomorrow. Let's pull one more ticker. This one I know has a couple failures in it. All right, so we got a 50 EMA crossing below the 200 EMA, letting us know we can short. And we're going to go ahead and enter in that in at 238, get out right for the end of the day at 236. So here's an opportunity right here for the on the other side. We have 50 EMA crossing under the 200 EMA. You're getting in at 239.24, and you're exiting at a candle above that 50 EMA at 237. Have a little bit of failure one right here with 50 EMA crossing with this choppiness going on right here with 50 EMA crossing over the 200 EMA. Let's say you get in at 239.03, and once that breaks the EMA, you're getting out at 239.7. Still making it with the profit even on a failure one. So as you can see, this is why I love this strategy so much. Another example right here, 50 EMA crossing above 200 EMA, you're going long. Same thing, 50 EMA going short. Let's find another example. Here we go, 50 EMA crossing above. You're going long right here, exiting right there. So this is a great great strategy for scalping on the 5-minute chart. 30-minute chart, you're not getting as much opportunity, which is why I don't like it. Here's a filler one right here. We're on Upstart. It kind of crosses. So, 1 out of 10, not bad. If you're getting a 9 out of 10 success rate, I would take that. Same thing, 5 EMA, you're playing this for massive gains. You're playing this from 144.45. You're selling before market close, probably on March 2nd, top 157. Same thing right here, probably selling before the market close. So this is a strategy I will start incorporating in all of my trades, and I hope you guys enjoyed this video, learned a little bit something about the 50 and the 200 EMA and how helpful they can be for on the 5-minute chart trading. Hope you guys have a good day.